Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Wednesday, July 19th, 2017. And here are some of today's trends in the news. On the market front, everything is higher. Except gold went down a little bit, but the markets keep going up. Over here in the States, S&P, NASDAQ, new highs. That's right. With all the U.S. prostitute media and all that fake news and the one story they always talk about, the Russians are coming, the Russians are coming. Hate the Russians. Don't forget to hate the Russians. You know you got to hate the Russians. Yep. Not one of them. Only us, where you read and hear history before it happens, and the first people on record of forecasting the Trump rally say, hey, go back to November 8th. That's right. Trump wins the election. 4 days later, we said this rally is real. This thing's moving forward. And it's more than just Trump. It's earnings. And earnings numbers are good. The economy on the whole is slow. We're not going to see much more of a boost than those Obama days, a little bit over 2%, not the Trump 3 to 4% because those tax cuts haven't come yet. Hey, haven't seen any infrastructure being built. Oh, yes, and that deregulation. How about NAFTA, folks? Yeah, he focused on that one too, Obama. And then again, Trump. That's right, the new NAFTA outline is out there. A lot about nothing. More the same, just a little changes. Talking about those Mexicans and Canadians, boy, they really manipulate that money. No, they don't. Oh, and by the way, that peso up 19% this year because the dollar keeps getting weaker. So, as the dollar keeps getting weaker and Trump says it's currency manipulation, then U.S. exports should soar, huh? But you know what that is. That's right. It's bigger than currency manipulation. It's having manufacturing, and that's only about 12% of U.S. GDP, thanks to the sellouts that began with Slick Willie Clinton with NAFTA. And what else do we have here? Ah, yes, in economic news, housing starts jumped 8.3%, hitting their highest levels since February, and mortgage applications rose 6.3%. So, earnings are clearly the driver here, but so too, the economy's doing okay. And as long as they keep those interest rates low, stock markets keep going up, and it keeps supporting the housing market. Gold. Not much going on. Again, the dollar's getting weaker. And they're saying now that the price of gold, where it is now, it's taken into account that there will be more money tightening. Maybe not so much from the USSA, but over there in Europe, they're talking about it, and other countries too, including Canada, that just raised its interest rates. So the higher the interest rates go, the more pressure on gold. But the good news is gold has been staying in this $1,200 range. Hasn't blown out below. But again, we see a $100 downside risk, and gold has to go over $1,400 before it goes back to the $2,000 mark. On the oil front, oil prices went up because inventories went down. So that's what's going on. Bigger drawdown on the inventories than expected. However, the United States is pumping out more oil than it has in many, many years. And Libya is now up to 1 million barrels per day. Remember, before they got rid of Gaddafi, they were pumping out 1.65 million barrels. So there's going to be more supply than demand. Also very important, you're going to start seeing continual more rigs coming on because it's shown that you can put more rigs on and you can keep pulling out oil out of the ground, out of any place else, in a lot of places, with oil stabilizing around $50 a barrel. So we still maintain our forecast. What you see is where it is. Don't go much further than that. Economy chugs as markets soar. Surging optimism in financial markets hasn't translated into a big pickup in economic growth. This is according to the Wall Street Journal. Stocks hit records. U.S. banks report stronger than expected earnings. But new government data shows consumer pulled back spending at mid-year even as markets rallied. Households also grew less optimistic about the future. And here we got it because the jobs stink. That's right. Not making any money. You look at those employment numbers. Oh, yeah, we created jobs, folks. Yep. And that hospitality sector, isn't that a nice name for being a waitress or bartender, making beds in hotels? Not that there's anything wrong with that, but if you want to move up higher in the scale, not a lot of opportunity, ambulatory services, low-paying jobs. People don't have money to buy a lot of goods. So, what do we have here? Retail sales, the gauge of consumer spending at stores, restaurants, and websites decreased a seasonally adjusted 0.2% in June after falling 0.1% in May. And when you go back to the dollar, yes, the dollar is getting weaker, but we've never been ones to say bye-bye dollar, because when you look at the facts, share of global bank reserves, U.S. dollar 64%, second euro 19.3%. Share of foreign exchange turnover in 2016, dollar 87.6%. Number two, the euro 31.4%. And China, the yuan, doesn't even rate. So, there we got it. Forecasters lower growth expectations. The number of economists seeing risks to the downturn climbed in the United States to 57% in this month's survey, the highest since the election. That's up from 51% last month and 37% just 2 months ago. Growth forecasts for the last 3 quarters of 2017 were all down in May. Forecasts for growth in 2018 were unchanged. You ready for this? 2.4%. And 2019, they're looking at the grand total of 1.9%. But where is their growth? China. You know what I keep saying. The business of China is business. The business of the United States is war. Yeah. Hey, how about them Democrats, huh? Getting ready for that midterm election. That's right. Nearly 40 of the people running for the House and the Senate in the Democratic Party are military people. Yay, them Democrats, those peace-loving Democrats. How about piece of crap? Yeah, they're gone, man. There's no Democratic Party. Just another form of a neoconservative party by their deeds and their actions. Hey, how about that war in Libya? Yeah, hey, how about Syria? Let's do one in Yemen. Yeah, let's give the Saudis over there a lot of bombs so they could slaughter innocent people. Anyway, the business of China is business. Talk about GDP growth. We got barely nothing over here. The numbers came out. And China's GDP growth, you got it, 6.9% in the second quarter, beating government's target. 6.9% growth in the first quarter, so there you got it. The first year-on-year acceleration since 2010. 6.9%. And we got a lousy what? 1.2, 1.4% for the first 2 quarters. We got wars to fight. We got peoples to kill. Got to melt them ISISes. All right, what else do we have here? A lot of this has to do with China's property bubble. Investments grew 8.5% in the first half. And what they're looking at, the strong property sector was crucial to the first half's strong growth because, again, that's the kind of percentage it's gaining in the GDP. And why is that GDP rising in China? Well, that property bubble keeps getting bigger. Yep. China's debt to GDP ratio is over 300%. But the Chinese government, just like the United States with the Federal Reserve, they'll come up with all kinds of schemes and tricks. Never knew about quantitative easing before, did you, huh? How about zero interest rate policy? They'll do anything to keep the Ponzi scheme alive. And all you folks out there that say that I called it wrong when I believed there was going to be a crash back in 2012, you're right. Never did quantitative easing before, never heard of zero interest rate policy. They'll make up anything they want. You look at the property bubble over there in China, you hear the numbers. Investment grew 8.5% in the first half of the year compared with 6.9% pace. But factory output, in the manufacturing sector grew 7.6%. And foreign trade boosted manufacturing. That's right. It was up 8.5%. Yeah. Again, business in China is business. Hey, one of your top trends, 2017, isn't it? Yep, buy and sell China. China's investment in overseas ports hits $20 billion in show of maritime clout. Ah, yes. China's railroad diplomacy. A total of 18 Chinese high-speed rail projects overseas, amounting to $145 billion. Yep. The ambition of China's use of rail for economic diplomacy rivals that of the United States Marshall Plan to revive Europe after the Second World War. You know how much the United States put into the Marshall Plan? In today's dollars, $130 billion, $13 billion back then. So what do we got? China putting in even more than that. Again, the business of China is business. The business of America is war. And you look at what's going on here. In 2014, World Bank reported that high-speed rail had a top speed of 350 kilometers per hour. How much is that? Yeah, that's almost 220 miles an hour. Here in the States, we got a top speed of Amtrak a little over 100 miles an hour, and on average, about 60 miles an hour. That's on a good day. So, what other news? Audi speeds ahead in race to launch first driverless cars. Yeah, guess what? We think they're going to be late in that race. You know why? Your Trends Monthly. Trends Monthly. You got your TrendsJournal recently. Now you have a Trends Monthly. History before it happens. Look at your top story. Driverless vehicles, the next dot-com bust. That's right. Oh, and they're talking about bye-bye internal combustion? Well, we don't see that. One story after another. Sunny money, the next cryptocurrency trend. Millennials, you don't want to apply for these jobs. They is for boomers and olders and youngers. New trend data, no limit to lifespan. Cough. Your doctor is waiting on the phone. Science gets closer to an exercise pill, a bionic hand that sees and knows what it wants. How a divided states of America affects you. Hey, those sea levels rising? Maybe yes, maybe no, but what does it mean? That and a lot more in your Trends Monthly. That's right. Click on now and get it. The only place we're going to have history before it happens. And again, as I said, the business of America is war. Need any more proof, folks? House Defense Bill. You ready for this? 117 Democrats voted for it. That's right. The War Party. Nearly $700 billion. Yeah. Isn't that great? More money for war, as our country is one of there's developing nations. Welcome to the undeveloping USSA. And again, the anti-Trump propaganda never stops. You know, at that dinner over at the G20, he was talking to Putin. He was talking to Putin. And then you get this crap in the toilet paper record, the New York Slime, Times, excuse me, that makes a big propaganda piece out of it, the way they promote this thing. Trump and Putin had second, undisclosed private conversation. They were sitting in front of a load of people at a dinner talking. You ever do that with people? And then they got all these little low-life clowns of nothing that they keep quoting about how suspicious it all is. The New York Times is a disgrace or a propaganda rag. It took us into war in Vietnam. It took us into war in Iraq. It took us into war in Afghanistan. And now it's taking us to more wars as they keep pumping up more hate. Hey, don't believe me? How about believing the latest poll that came out? 76% of Americans fear new war. That's right. Within the next 4 years. Because the lowlifes that are whores, gotta be proper, prostitutes that put out for Washington's military-industrial complex and security complex, and their corporate johns keep selling us war, and they keep pushing us more and more closer to it. So, what are you going to do? Occupy peace or occupy war? Do you want to spend money for peace or put your life on the line and pay for it? This is Gerald Celente, and that's some of today's Trends in the News. Remember, occupypeace.us or Occupy War. And don't forget your new Trends Monthly, out today, History Before It Happens.